Monaco 64, home of alternative economics and contrarian views. Well, today I have the pleasure of speaking with Mark O'Byrne. Mark founded, the biggest bullion dealer in Ireland back in 2003 called Goldcore. He sold it on in 2020, and now he's the owner of Tara Coins, taracoins.com. And I spoke to Mark back in October 2023. And at the time, gold was below 2000. And like me, he uh, he expected the fiat currencies, not just the dollar, to keep devaluing versus gold. And here we are, 2.5 years later almost, and gold is near 5,000. Mark, welcome back. And how are you
Thanks for
doing?
having me on again, and really appreciate the work you're doing. You do a great job of keeping us all informed as to what's happening in these markets because it's very, very volatile, as you know, and there's a lot of daily action. But it's great that you're helping people understand the importance of keeping a long-term view. So yeah, thank you.
You're welcome. So maybe you could talk a little bit about your background, how you got into precious metals, how you decided to create Gold Core, and then how you've moved on to another, enterprise now called Tara Coins, and I'm going to bring up the website too.
Oh, you're very good. Thank you, Mario. Yeah, so my background I actually studied history in University College Dublin. So I have a BA in history. I studied Greek and Roman civilization. I studied archaeology. And yeah, I found it absolutely fascinating, particularly the rise and fall of empires, because you see that very clearly, obviously, the Greek Empire and the Roman Empire. And I was always, as a kid, sort of a doubting Thomas. I was always asking questions and trying to understand things. And because none of it made sense to me, a lot of the sort of simplistic history that we were taught. So I was trying to understand what's really happening here, what's driving this, And I started to realize, well, gold, silver, land, resources were a big driving factor, obviously, of and the motivation of the kings and queens and the emperors throughout history. So yeah, I became aware of that, and I sort of yeah went away from it. My dad offered me a job in his business with an employment agency. I did that for a little while. Didn't find it very rewarding, but I started buying gold and silver in a private capacity soon after. The Y2K thing was interesting and had me wondering, are there other risks, tech risks, and other risks posed to the banking system? Because there's a lot of scaremongering about that Y2K. I don't know if you remember in 1999. So the internet was in its infancy, and yeah, there was scaremongering that the ATMs were going to work. So I started looking at gold and silver, and then September 11th happened, and when that happened, I said, right, it's time to start buying. So I started buying gold and silver in a private capacity. And interestingly, there was no one in Ireland selling gold or silver. I couldn't believe it. And I spoke to friends of mine who worked in finance, and they all laughed at me. They literally laughed at me and said, "What do you do? And that's a barbaric relic. Why don't you buy property or blue chip Irish shares like Bank of Ireland, AIB, which subsequently collapsed in price. So it was interesting. I knew a little bit about investing, both the fundamental side of investing and long-term returns, what you tend to get generated from the different assets. And I started educating myself about technical analysis as well. And when I looked at the charts, obviously it was an absolute no-brainer. So long story short, I said, right, there's an opportunity here to set up a company that actually sells gold coins, gold bars. So I set that up in 2003. And as you said, we became the largest gold broker in Ireland. We had, and myself and my business partner grew it over the years. And we had basically, yeah, €1 billion in turnover by the time I left in 2020. Million in bullion stored for our clients, fully segregated, fully allocated, the way that bullion should be owned. If you don't take possession of it, it has to be fully segregated, fully allocated, and in your name. Because yeah, the ETFs, we might talk about that briefly. So the risk involved in ETFs and these other sort of digital forms of gold and silver. So yeah, so there was 200 million assets under management, €1 billion of turnover, and it's great because now that money of the gold and silver is money, so it has been revalued by three, four, five times. So it's great. There's a lot of people, like we had about 20,000 clients. So a lot of people have done very, very well, and they've protected their wealth. So, but it was hard. It was much harder than I thought it would be because I thought the penny would drop when the financial crisis happened. I was warning about the financial crisis that was coming in 2005, 6, 7. I was writing a daily market update every single day to warn people that a financial crisis was coming and they need to diversify and own physical gold and silver. And I was just shocked at how the media was covering it, especially the Financial Times. And I realized that a lot of the local media and national media would follow the Financial Times. So the business editors in local newspapers and national newspapers would follow the lead of the Financial Times. And the Financial Times was telling them these things were volatile, particularly silver, but gold as well, you know. So I could see how they were, and you've done a little bit as well, obviously, in terms of the Financial Times and how it can be twisting things. And then people think, oh, this is risky because the experts are saying this is risky. So I realized there's a lot of narratives around gold and silver, and that's why I spent a lot of time actually, you know, doing the education piece as you're doing now, you know. So yeah, so that was gold core, and yeah, but basically I had a lot of Irish people coming to me saying, why are we buying gold coins with kings' heads on them or queens' heads on them, and Irish Americans in particular actually would be saying, well, why are we buying, you know, British coins, American coins, South African coins, Australian coins? Why aren't there Irish coins, you know? So I used to get onto the central bank and say, we should do a legal tender Irish coin, same way the Austrians have the Philharmonic, you know? But yeah, it never really got anywhere, and I never got clear why that was. But any long story short, in 2023, I decided to do it myself. So we minted the first Irish bullion non-legal tender coins. So they're coins, they're beautiful sovereign coins that have the sacred symbols of Ireland on them, but they're non-legal tender. So they don't have a fiat denomination on them. They don't have a euro, dollar, pound denomination on them. So people are buying them for their intrinsic value and for their beauty as well. So yeah, it's gone very well. I see you had Stefan Gleason from Money Metals Exchange on the other day. So they're our biggest distributor. Basically, we mint the coins, we outsource the minting to mints in Germany and mints in the US because I want to have minting and distribution, wholesale distribution in the EU and the US because unfortunately I do believe these trade wars are going to escalate, and I do believe we will see more tariffs and more issues in that regard. So I want to have that minting distribution in different countries. So yeah, so they're being minted in the US, minting in the EU. Email Exchange are actually one of the biggest distributors I have in the US. So, and they're a very, very good partner because
Yeah,
they understand precious metals as sound money, you know. And I have conversations with many of the other. I'm wholesaling basically, so I don't sell directly to the public. I sell to the larger retailers.
I see. And I see
Yeah,
you've got a tenth of an ounce uh, a round. I guess you call it a round. It's not a coin if it's not.
exactly. It's a round or a medal or a non-legal
Yeah,
tender coin.
yeah. So
Yeah,
that's
yeah.
pretty interesting. A tenth of an ounce.
It
It's
is, yeah, and I
affordable.
did that for a reason because I actually started with silver in 2023 because I believe silver was, like yourself, fundamentally undervalued, you know, and it
Yeah,
clearly was, obviously, when you look at the gold silver ratio. And then I did the tenth of an ounce gold because I believe that gold, like yourself, is going to go much, much higher. Not that it's going higher, it's the dollar and the euro and the pound and the fiat currency is being devalued. And then I did the 1 gram gold because I think 1 gram gold is going to become very, very interesting when gold goes to 20,000 plus. And I don't like making predictions, you know, but so I'm not making that prediction, even though I just said that. But I do genuinely believe the dollar is going to be devalued to 20,000 of an ounce. It used to be 1/20th of an ounce. And this is the key thing that people need to understand. I think many of your viewers do understand it. But we need to start pricing things in weights, honest weights and measures, not in fiat digits on a screen. So yeah, obviously £1 used to be one gold sovereign.
yeah.
Then the
It still
$20.
is legally.
Yeah, yeah, yeah,
Yeah,
yeah,
a
yeah.
sovereign
It
is
is.
still a pound. I mean, yeah, it's technically it's a pound. I think it's been since 1837.
Is it? Yeah, yeah, yeah. Same as a pound. Well, it's no longer sterling is no longer same as a pound because obviously it's paper, and paper is for paupers, and
Yeah,
that's not natural law. So and now paper, at least with paper, you know that there was, you know, you'd have to chop down trees and you'd have to get the paper and you'd have to get the ink. Whereas now, obviously, they're just going keyboards, and they're trying to move to this sort of quantum digital system, which is, you know, just they go on keyboards and create, you know, hundreds of millions, you know. So and it's very dangerous, but people should think in ounce terms. And as you know, 1 ounce used to be a $20 gold piece. So with $1, you're buying 1/20th of an ounce. So in recent days, we saw that people can get much more value. They were buying with $1 5,500 of an ounce, and now they're buying 4,800 an ounce, something like that, you know. And I think the more people look at it in ounce terms rather than, because the volatility, as you know, it's already gone off. It's gone off the charts, but it's going to go even more off the charts, you know. So I think you just fade out because people get sticker shock. Like I get sticker shock, and I've been expecting this for a long time. But when I see this gold and silver price up 300, 400, $500, like I'm expecting it, but it's still you still sort of go wow. So I because of the scale of it in dollar fiat terms. So I think it's important to keep an eye on the percentage terms, and then to realize, you know, you and many of your excellent guests come on. They always encourage people to take a long-term view, cost average. And I think that is the most important thing, that people, you know, have a very strong high allocations to physical gold and silver. And then, you know, if you're over allocated, you just hold your position, you take a long-term view, and occasionally you might sell a small amount if you've got some costs that you need to take care of, you know. But in general, yeah, cost averaging, if people haven't got a position, that this is an important thing to realize, that they need to get it's called geometric cost averaging, whereby if you're very exposed if you don't have any precious metals at all. So for any so-called newbies, or, you know, people who have never bought gold here before, you know, decide how much of your net worth you're going to put into gold, and then get that initial allocation, and say you decide you're going to put, say, let's just say 20,000 you're going to put into gold. So rather than dollar cost averaging over the next few months at 5,000 a month for 4 months, you would put, say, 10,000 in pretty much straight away, and then cost average the rest, you know, because the scale of risk in the world is so high today that people really need to just take the medium and long term view, forget about the short term, because as we know, it is hugely volatile, and it will become more volatile, and that's partly the nature of markets. When you have massive supply demand for a small physical market like the gold and silver market, so that it's partly the nature of free markets, but it's also, as we know, there is manipulation and there's concentrated short selling. And I think they're going to try and make it as volatile as possible in order to put the man and the woman off of the street, put them off precious metals completely, you know. And they're already, Financial Times last week was comparing gold and silver to meme stocks, you know, which is pretty outrageous.
I saw that. Yeah, I saw that today. The meme or meme stocks. I would say, Mark, that it's more the currencies that are dropping so quickly, and that's
Exactly.
what makes gold and silver. Because there's a rush. Being big institutions, central banks, sovereign wealth funds, they're rushing out of treasuries and other government bonds, and rushing into to gold and silver, and it's like putting the Niagara Falls through a hose pipe. I
That's yeah,
think
exactly it. Yeah, and
FT always gets it upside down.
it does, it does. Yeah, it's incredible that they completely ignore the fundamentals of the supply and demand. I mean, how can you cover any market and focus solely on the speculative element? And there is a small speculative element, but that speculative element is primarily bullion banks who have massive concentrated short positions, who want to get out of those concentrated short positions. You know, I mean, most of the bullion dealers I've spoken in recent days, there was a lot of buying, and there is some new entrants to the marketplace, but there's no sort of mass awakening. There's no sort of run on banks. It's, you know, as Stefan said the other day, we've gone from, say, 1% of the retail public owning any gold whatsoever. If even that, I think it might be 1% in America, but I would say in the UK and Ireland it's probably, because they do have a hard money, sound money tradition in the US, much more so than we do in the UK and Ireland and some of the European countries. The Germans would have it more, obviously, as well. But in our countries, I think the UK and Ireland, it might have gone from 0.5% to 1% in the last, you know, year or 2 years, you know. So it's going from a very small base. And a lot of the bullion dealers, they're very small companies with only a handful of employees, you know. So logistically, they actually struggle to keep up with demand. So yeah, they're run off their feet. And you know, they're gone from, you know, 20 trades a day to 50 trades a day or 60 trades a day, but it's still very, very small compared to the amount of money that's being invested in, say, the stock market every day, or bonds, or indeed property markets. You know, if you were to compare the volumes in terms of pounds, euros, and dollars. So it shows to me, I think that's a very important metric, is how many people own gold, and we're only going to have, you know, believe we'll only be at the end of this cycle. It's, you know, it's not a bull market per se, because it's actually just a devaluation of the dollar, and the dollar losing its reserve currency status. So it's only when that happens that we will see the reset, and we will see the dollar, euro, pound price of these metals bottom out in effect, you know. So it's good to invert, always invert, and look at the chart. When you see the chart going up, it's actually, you know, as you said before, it's the dollar, the euro, the pound going down. So, and then I think that's when the mandatory, we will probably see 15-20% of people in the Western world will be owning precious metals. And it's probably that amount and much more in China and India now. You know, I think we're slow learners. We're only slowly realizing what the Asians have known. They know that in their DNA and in their souls. You know, and whereas we have been conditioned and indoctrinated over the years to see gold and silver as jewelry, as a barbaric relic from the past, you know, all these negative associations.
Yeah.
When in truth, it is the most superior form of sound money in the world. And
Yeah.
it's,
Uh,
yeah,
Risky and volatile. I mean, I've had many people, friends, and ask in the past, "Oh, should I buy gold?" I said yes. You know, this was 5, 6, 7 years ago, and they never did because they always said, "Oh, it's too risky anyway. I'm not going to do it." You mentioned 1999, the Y2K. I remember that. Yeah, people were talking about the risk. And then you had, of course, 9/11, and that's when you started buying gold. I started buying gold maybe a year later. And then you said you saw that crisis coming and in '08. Yeah, a lot of people did. Quite a few people did. Some people say, oh, nobody saw it, but we could see that. I mean, I could see it coming too. I could see it, especially here in the UK, the fact that the government under Gordon Brown as chancellor, they were deficit spending, they were like growing the welfare state, and I knew it would end in tears. And then in Ireland as well, and other European countries, you had the sovereign debt crisis in 2011, 2012. And you said that your friend said, "Oh, you should invest in the Bank of Ireland and so on." But I remember, Mark, that during that sovereign debt crisis, the pigs they called them,
yeah,
Portugal, Ireland, Italy, Greece, and Spain, that the only solvent bank in Ireland at the time was Paddy Power, the betting company, right? So
yeah.
are the Irish have why do you think they haven't woken up to the fact that the system is not fit for purpose? And why do you think only 1% of the Irish participate in gold or silver? I guess it's the same thing to do. It's the same thing, similar to what it is everywhere else, right?
Yeah.
The financial, let's say, class and the press, they keep people in the dark.
Yeah, no, it is. It's like I don't like using the word propaganda. It's a strong word, but it is. There is a lot of propaganda against gold and silver, you know, and it doesn't get covered. I mean, it's amazing how gold and silver wasn't covered in the last year. You know, it was the top performing asset. At the end of the year, FT, a lot of these financial publications barely covered the fact that it had, both of them had huge, massive performance, best performance in many years in 2025. And it was only FT only put gold and silver on the front page of the Financial Times, I think there on Saturday, after the price had fallen very sharply, you know. So whenever there's volatility or anything negative about gold, they prominently feature that, you know. Whereas when there's any, they actually don't do rigorous analysis, and that's part of the problem, because if you do any sort of analysis of it and you look at the long-term returns, I did a report recently which looked at the gold performance in euro terms, because we all tend to focus on gold in dollar terms, but it's important people think in local currency terms. And I've done one for sterling as well, which I'm going to publish now in the next few days. So gold price in euros, it's been absolutely extraordinary returns. And this isn't being reported in the Financial Times, which is very pro the euro, obviously. So, you know, basically since the euro's introduction in 1999, gold came onto the market. It was 245 euros per ounce in 1999 when the euro was first launched, you know. So you could buy €1 could buy 1/245th of an ounce. And now today we're about 4,200 euros per ounce. So you could buy, you know, €1 could buy 4,200 of an ounce. So it's actually appreciated something like 1,600% in the 26 years. And that's equivalent to an annual return of 11.2%. 2%. So it's massively outperformed the S&P 500. But the media, the financial experts, the business editors, the economic editors, the good journalists, journalism has really it's declined obviously massively in recent years. A lot of the good people have gotten out.